Hey everybody, Boris Schlasser from BK Forex. Welcome to our weekly Forex technicals for 9/23, 9/30. Will the dollar bounce back? As always, trading foreign exchange on margin carries a high level risk and may not be suitable for all investors. I ask you to read the disclaimer very carefully to understand all the risks associated with trading on margin and seek advice from an independent financial advisor if you have any doubts. Well, the trade this week was clearly driven by the Fed, as we noted last week, and there was a big anti-dollar move on Wednesday after the Fed basically delayed the taper, which pushed euro all the way through the key 34.50 level through the 35s. But now we find ourselves stalling really essentially ahead of the 36s. And what's more interesting to me, I think, is the fact that while we hold the 35 here, if the euro begins to retrace towards the 34.50, there was the breakout zone, we could be very much on the cusp of yet another false breakout, because a break below 34.50 will put us right back into the range zone and would suggest that this move may have been just another false dawn in all of the anti-dollar rallies that we've seen. So it's very important to watch this. The key levels in the euro right now for the week are obviously going to be 36 to the top side. 34.50 will be the key hold, but a break of the 34 will really create a much more negative bias on the euro in the intermediate term basis and could push us right back towards this congestion level of 33.50. So I think it's worth watching, because if the Fed move gets unwound completely, that would suggest, I think, a much more constructive move for the dollar and a much less constructive move for the euro, obviously, as we go forward. One of the key pairs that has really not been nearly as weak on the anti-dollar move has been dollar yen, where although the initial reaction was down to the 98s, it wasn't nearly proportionate as of all the other pairs. And more importantly, it bounced right back up. We took out 99s. We're now sort of hovering right around this 99.50 level. And of course, setting ourselves up precisely for this next big run towards the 100. If dollar yen can take another gander at the 100 level, and more importantly, the 150 is going to be the key level that it needs to hold. If it can hold above that level, that would make it a much more constructive, positive move in dollar yen. Still continues to have higher lows, still continues to essentially have a mild but very discernible upward bias. And I think that's perhaps one of the more surprising aspects of the move here, is that we have not had any kind of a major unwind in the dollar yen trade, which may signal to us that the dollar still has a lot of juice to go. And more importantly, I think the key levels again for this week above 105, 100.50, a very, very bullish construct, because it would clear all of this congestion over here. To the downside, the really big unwind would be below the 97.50. That would take us sort of right down here towards the test of the double bottom. Would also create the first lower lower low that we've seen in a long time, and would create more of a distribution pattern. So depending on how dollar yen trades, will give us a clue as to the strength of the dollar going forward. Pound, similar kind of a story to the euro. We flamed out at 6100's first piece of negative news out of UK, and I think we certainly due for a little more of a correction. 59 is the immediate support. 58 is the much deeper breakout support over here. For pound to get more bullish now, really have to take out the 62s. So until we get 62s taken out, the pound is essentially in a corrective to a downward phase for the near term. Aussie, similar kind of a story. Aussie, remember we talked about 95 being the key target level of the longs, and of course we tagged that. But now the Aussie has corrected a little bit to the downside, and we're holding 94s, 93.50. Key support in the Aussie. That needs to hold. If that doesn't hold, we could tumble right back down to 92s. That could be yet another sort of a higher but still false breakout in the Aussie on its recovery zone. Overall, though, Aussie is still much more in a recovery zone than not, but it may have gotten overextended in the near term. One of the more interesting side stories to the Aussie is if you look at the Aussie Kiwi is actually on the cusp of brand new yearly lows at 112. And that could be a very, very interesting development, because the key differential here is, of course, the interest rate story. The RBNZ communicated they may actually raise rates, whereas everyone is still thinking the RBA may have to lower rates. Now, with Chinese data coming up this week, if that becomes weaker, if that signals perhaps Chinese demand starting to slow into the year end, could put more pressure on the Aussie, could suggest more interest rate cuts out of RBA. That could break us. If we break 112, 111 is a natural immediate move. But ultimately, the real big move here is 110, which would be a very, very key level that a lot of specs are going to be watching. So the Aussie Kiwi trade is kind of very interesting as a sidebar to the Aussie price action. Um, Conversely, if we look at the Kiwi, of course, Kiwi is holding very well. Kiwi also flamed out, but the corrective move in Kiwi has been much more contained. I do think Kiwi has a chance now to slip, obviously, to 8,300 if on all this corrective anti-dollar move. To the top side, the 85 is a very, very sticky level. I think it's going to take tremendous amount of power to push us through there, and certainly tremendous amount of power to push us beyond that. In many ways, probably one of the better range trades, if we do push ourselves to the 85, is going to be the short against this 86, because that's going to take a tremendous amount of power to go through the 85, 86 level without encountering some kind of correction. For the time being, the corrective move here is between 84 and 83, and a break of the 83, of course, takes us right back down towards the initial breakout of the 82s. All of this, in many ways, is sort of the unwind of the Fed no taper rally. Just how much of that unwind occurs and on what relative basis it happens creates all of these differential opportunities here for next week going forward. Lastly, we haven't looked at the CAD in a long time. Dollar CAD not nearly as strong on the dollar basis as the other currency pairs. And what's interesting about dollar CAD is that the spike low to the 102s was actually bought very quickly, suggesting that dollar CAD may have found a very, very quick bottom here. The top side here probably tops out around 103.50. Certainly 104 is a big, big resistance level here that would weigh on the pair. And it looks more likely they're going to be just sort of doing 103.50, 102 as a consolidation phase. But either way, it's going to take tremendous amount of selling power to break the 102s here in dollar CAD. And dollar CAD on a relative basis is probably going to be lagging. So that brings up a couple of interesting ideas. So Aussie CAD, I think, really is doing nothing because let me see if I can even find it. I have to do this manually. Sorry. Because both pairs have been relatively weak, so I don't think there's much opportunity here, and it's just been very, very tight. On the other hand, if you have this continuous outperformance of the Kiwi on an interest rate basis, Kiwi CAD, which is not a pair that a lot of people kind of look at carefully. Look at this move though. It has just been on a tear through the 86s. The key move here on the Kiwi CAD basis is a break of the highs here, which would be around 86.25 or so, which could put us right up towards the yearly highs here around 87. So that may be a out of the box kind of an interesting look here on a relative basis as the week progresses. In either case, a lot of interesting movement this week. The calendar is still relatively quiet. The big data week is, of course, the week following. But for now, it seems to be going to be this week. It seems to be the response to the anti-Fed rally unwind. If the dollar can catch a little bit of a bid, we could have some corrective action in all the high beta currencies. Wishing you guys the best of luck and the best of trading. This is Boris Schlossberg from BK Forex. Over.